Good day to all. Today we're going to discuss about the first part involving sustainability in relation to environmental accounting. In the previous topic and video, we've discussed about how sustainability accounting plays a very important role when it comes to the placement and the positioning of the organization as years would go by or pass by in its specific life, or let's say life cycle. And with this, we will now again look into the connection of the two: sustainability accounting as well as the environmental accounting, knowing that environmental aspects are basically one of the three pillars or three P's in our discussions in sustainability accounting and reporting. Of course, we've had the three P's in the form of people, we've had planet, and planet is for the environment, and we also have profit. So these are the three P's. And then to continue, our three P's are also based on the acronym the C. So people would be for social, planet for environmental asset or environment, and then profit for economic. So those are the concepts and the pillars and the factors about sustainability accounting. Now, as a review, what is sustainability? If we talk about sustainability and sustainable development, this is the development that meets the needs of the present without compromising the ability of future generations to meet their own needs. So in other words, if we are going to nurture, to develop, to enhance, to innovate further, whatever we have at the present, such should meet the demands, the needs of those people at the present, but then the needs of those in the future and the future generations should not be compromised in the process. So in other words, they should also be taken into account in thinking of the development. And sustainability is, of course, in that sense that we look not just in the present, but also in the future. Now, sustainability would encompass a lot of issues, such as number one, the intergenerational equity, wherein we talk about fairness and justice and equality of the treatment and the welfare of everybody and all sectors. If we talk or if we think and speak about the environment and also our economy, for example, or the world as a whole. So this talks about the relationship of a lot of generations. So if we talk about generation X, Y, Z, and so on and so forth, their connections with each other, their interrelationships are being taken into account. So that's in between or among a lot of generations. Next would be intra, which is intra, that means within the generation itself. So let's say generation X, then we talk about the equity or the fairness and justice of the group X, or the generation X, generation Y, and generation Z. Next is eco justice. So the fairness and equality in terms of our environment or our environmental aspect of the C and the three P's with respect to economics or with respect to the costs and benefits. So we always think that the benefits must be greater than the cost anyway. If eco-justice talks about fairness and equality, efficiency would talk now on our ability and the concept or situation wherein we are able to achieve our objectives and goals and purposes without sacrificing, without abandoning the quality of our products, and then with the least or lesser amount of resources consumed in the process. And still, benefits are greater than the costs. So these are the four issues about sustainability that must be addressed in order for us to be able to say that really there is sustainable development that we talk about. These are important national questions, but also have significant corporate and individual elements, which is very true. So this is significant. Forgive me with the respective error on spelling. Anyway, so important considerations, not just by the economy, not just by the nation or state or country, but also with the businesses and even with the individual or the company per company basis, so as the people composing the organizations. Now, next to that is the reporting. So after we think of the development and then how do we account for the transactions which are geared towards sustainability, we also look into the ways that we are going to report such. And that's why we should be able to furnish the reports that would demonstrate, that would discuss, that would show to us the matters involving sustainability efforts and initiatives of the organization. And then this would also show to us not only the financial factors, but also the financial amounts or values. So these are the reporting items. So we have the CSR or corporate social reporting, and then we also have the CSR reporting, same terms, corporate social responsibility or CSR reporting. We also have our triple bottom line reporting, in which we again talk about the 3 Ps. Again, people, planet, and profit. Sustainability reporting, the same. Environmental reporting, the same. We're talking about the same things. Social audit, yes, because if we are going to review and evaluate our reports now issued about sustainability based on certain criteria, we look into the impact of the efforts and initiatives of the organization towards society. So that's the point of that. And then also the ESG reports. This is also another term, and this is the one that I usually read and go over with several companies. So we have environmental, which talks about, again, the planet, social, which talks about the people, and governance. This is on the organization, but then, of course, the organization will have the profit, how they manage the business, that they would be the board of directors, and also those charged with governance reports, and also the reports addressed to our stakeholders, those people who are reliant and dependent upon the organization's management, as well as how well the organization is managed. So that's what stakeholder reports are. Next, a sustainability report refers to a report that not only presents information about the economic value of an entity, so that's what I've said, not just financial matters, but also with very important core matters, not just the profit, not just the economic, but also the environmental. So that's the planet, and social value, the people composing the organization or business. This is not only useful for the reporting purposes, as you can see on the slide, but also performance measurement. So the organization's performance, again, with the efforts and initiatives which are geared towards sustainability. Also with accounting, the auditing, so which comes after our outputs of the accounting processes. So the reports, the financial statements, composing the financial reports, as well as the other financial items. So overall financial reports and the overall company report composed of the financial reports and the non-financial ones. So sustainability reporting normally would be on the non-financial ones or items. Next would be, what are the benefits of sustainability reporting for companies? By having embedding sound corporate governance, so the corporate governance efforts and policies and internal controls are working as they should be and as they should be intended in the organization. The ethics systems are there. Also, they are working, they are sound throughout all levels of an organization, from the bottom of the business up to the top, or the most with the top, because they are going to be there. They are the ones charged with the governance. And then next is improved management of risk through enhanced management systems and performance monitoring. So by this one, Remember, in business, we said that risks are inevitable, risks are inescapable. We cannot actually eliminate risks, but we can manage them. We can minimize, we can lessen, we can decrease the impact of the risks. So by this, how do we do such? By enhanced management systems and also with performance monitoring. Another benefit would be formalizing and enhancing communication with key stakeholders. So in terms of how we are going to communicate, to provide information. Normally, we do this from bottom up and top down. These are the normal ways of communication. Although, as also explained in a lot of sources, the flow actually of information is not linear. It's actually like in so many ways or flows. It can be in varying directions. So to simplify though, we're just showing linear or one line flow from bottom up and top down. So by having the reporting, this would formalize and enhance communication, especially with the outsiders, like the key stakeholders, not just the internal, like the finance sector, other government regulatory agencies like Bureau of Internal Revenue in the Philippines, and then among the others, suppliers. Oh, for the government, we have the Securities and Exchange Commission, which is very important for our filing of published and audited financial statements. Suppliers, community, and customers, they are external stakeholders, and they will be relying upon the reports presented by the organization for sustainability initiatives. Next is attracting and retaining competent staff by demonstrating an organization which is focused on values and its long-term existence. So knowing that there are sustainability initiatives, then staff who is or are competent, have the necessary educational background, trainings, technical know-hows, licenses, certifications, are attracted and retained in the organization because they would feel that, oh, the business or this organization is focused on the values, focused on the things that are very important for him or her or them as employees, and the reason that they would be staying longer on top of other things. So that would focus on the long-term existence, hence strategic. Then ability to benchmark performance both within industries and across industries. So we can achieve intercomparability and intra comparability. So intra, I reverse that, that's within, and inter is across industry. So we can benchmark, we can actually compare the performance, we can actually evaluate whether our performance is able to match or able to hit or able to achieve the respective target or standard or benchmark or quota. Then another thing that we should know is all about integrated reporting. The word integrated means incorporated or included. So in other words, our reports involving sustainability accounting and reporting and environmental reporting, as explained a while ago with so many terms being mentioned, are also included, are going to be included in our reports, hence integrated reporting. An initiative of the International Integrated Reporting Committee with the aim of, so these are the aims. Number one, to create a globally accepted integrated reporting framework, which brings together not just the financial, but also environmental, social, and governance information in a clear, concise, consistent, and comparable format. And this one is very important, this aspect here, since if we think about sustainability, if you think about environmental reporting and accounting and all, there can be differences among different industries, economies, and organizations. So by having certain framework or standard, just like with our accounting standards, then we can be able to produce outputs that are comparable, and we can be consistent along the way if we are able to comply with those clear standards. Then second one is to help with the development of more comprehensive and comprehensible information about organizations, prospective as well as retrospective, to meet the needs of the emerging, more sustainable global economy. In this case, we want to be innovative. We want to have continuous improvement or Kaizen. And then in this case, we want that our development would result to reporting and giving of information to stakeholders, which are comprehensive. So a lot of things are being tackled and discussed, but not too much to the point that the information is no longer understandable. It should be detailed, but understandable or still understandable. And then we look into the information that would have impact in the current and future. That's perspective. But we also look into the past, retrospective, which would have impact on the present and the future. Why? Because the needs are emerging, the needs are ever changing and dynamic, and we need to be more sustainable. We need to be more global economy, especially that there are borders that are open. So certain countries or economies are opening their doors to a lot of citizens and workers worldwide. So in that case, there would be mixture of opportunities and people working together. And we are now being in a global economy. So the economies are now merged or connected with each other. But anyway, just to share also, because of the pandemic, so this actually prevented us from mixing and merging with a lot of companies or organizations. Next is environmental reporting. Actually, although that's similar to sustainability reporting, but if we are going to be strict about it, it is a subset. It's just one area. It is one area of environmental reporting. To date, research has not drawn any clear conclusions as to the relationship between environmental performance and environmental disclosure. Yeah, so research-based concepts are not yet derived at, like the findings can tell us of the relationship of the two, although we can say that if there is like a performance about environmental initiatives and efforts, so we need to disclose such, something like that. But then again, conclusions are not yet clear about them from the research perspective. Legitimacy theory would propose that entities with poor environmental performance would more likely produce greater levels or higher quality environmental information to address potential or legitimacy threats. Okay, so this one is a good point, that legitimacy theory, so the theory about being correct or genuine, legally speaking, about the laws, entities with poor environmental performance would more likely produce greater levels or higher quality environmental information. So they can provide strong information, strong examples about legitimacy threats. So we can learn from them and we can create certain laws or certain policies that can help us address those threats. So that's the point of this particular paragraph. Then a number of studies, however, have found a relationship between more extensive, quantifiable environmental disclosures. So if our disclosures, and in that, I mean, additional information about our environment, so more extensive, more details are again provided, and we can quantify, we can add more information, not just, let's say, the descriptives, not just the discussions, but also the amounts or values about the environment. So in that case, we can have good environmental performance, and also, or for sure, this is part, the P1, the profit, the third P, good economic performance. So in other words, there's a relationship between disclosures and then good performance in terms of environment and economic. So that means that we are going to disclose more. So that's the unique thing. My point here, or my idea here, is that probably because if we are having the good performances, we are very proud, we are wanting to show to the world or universe or globe, or we want to inform the general public about how great our performance or performances are, or let's say even just good, not just, or even not having the great performances. So that's going to be okay for as long as we are able to provide the necessary things. And also, if we have more disclosures, that shows our pride, that shows our eagerness to again provide more information about the goodness and the greatness of our performances, environmentally and economically speaking. Here are our guidelines for sustainability reporting. Here is a range of guidelines which have emerged to provide direction on appropriate sustainability reporting. So UN has initiatives. So they produced a number of reporting guidelines and initiatives once again. Other groups that have provided guidelines as well, we have the OECD, which stands for the Organization for Economic Cooperation and Development, and the ISO. So they have provided more information, more guidelines in order for us to be able to just adopt and just follow these guidelines to have better sustainability reporting. Next would be overview of selection indicators. So here are our items or topics or areas that we look into. And then what would be the good indicator, or what would be our indicators of such possible and probable for sustainability items. So example, for the group trade, investment, and linkages, our indicators or our KPIs, key performance indicators, or areas to look into would be the total revenues, the value of imports versus exports. Because if we talk about the company and the economy as a whole, remember we look into the sales. So exports would have been better to be greater than imports. Also, we look into the total new investments and the local purchasing to make our economy active. That's one group. Second group, employment creation and labor practices. So we provide employment opportunities. And then in that case, total workforce with breakdown by employment type, employment contract, and gender. So some employment contracts, let me begin with that, would be probationary, some are regular, and so on. Then employment type would be, for example, is that, let's say, for rank and file or managerial or supervisory, or white collared or blue collar jobs. Gender, of course, we know that sociological aspects about our sexual orientation or preference. So that's also an important thing, especially nowadays that we are in the world of highlighting also the sexual orientation and preference, not just about the sex. Then employee wages and benefits with breakdown by employment type and gender, okay? The employee's remuneration and their benefits received. Next, total number and rate of employee turnover. So the change of employees, what is the rate, how many months as an average or days? I think that is worst, but what if? And then broken down by gender, percentage of employees covered by collective agreements, because if there are some organizations or labor unions, then that would have impact also on how the organization is run and will be run. Next, technology and human resources development. If the organization uses IT or IS, information technology and information systems in the organization, normally that would expedite and that would make the processes in the organization faster, quicker, and that would result to quicker also decision making with faster and quicker processes. So we have expenditure in research and development or R&D. Then what about on the training per year per employee broken down by employee category? So the time also, and then also the payments for them. So in that case, employee training per year per employee broken down also by category. Next would be health and safety. So the cost of employee health and safety is also very important. How much is allocated involving the protection of employees from certain occupational hazards. So another indicator would be the work-based loss because of the accidents, injuries, and illness related to occupation. Next would be government and community contributions. Is the organization paying the government dues accordingly? And if there are certain voluntary or not required organizations, again, voluntary contributions are made to these civil societies. So that's also one thing. One and last area would be corruption. So number of convictions for violations of corruption, related laws or regulations, and amount of fines paid or payable. So this is also one important area. Like there are a lot of workers and managers who are convicted with corruption in the business. So that's one thing that we also have to look into, since if we have a lot of issues in our business and that would have impact on our stakeholders and the general public, then expect that our organization would be facing a lot of legal issues and also takeover threats, among others, which are tackled in other subjects or courses in our department. And with that, this is the first part for our discussions. Thank you very much for listening, and God bless us all. Make sure to watch our next video, part 2.